afternoon and welcome to our today's seminar. My name is Alessandro Lombardo. As you may understand from my name, I am Italian and I am the head of the Cbonds International Relations Department. Today, we are very happy to present the first international bond issuance performed by TBI Bank, which is a Bulgarian bank headquartered in Sofia. 10% expected yield. That seems really attractive. So let me present you to our today's guest. I have the pleasure to be today with Mr. Piotr Baron, CEO of TBI Financial Services, Lucas Tursa, head of funding at TBI Bank, and Kostin Minkovci, Chief Credit Officer at TBI Bank. Welcome everyone to today's seminar.
Alessandro, thank you.
Hello.
Hello, colleagues. So before starting with the presentation of the bank itself about this specific bond issuance, let me provide a very small introduction about the bank itself. As I said, TBI Bank is headquartered in Sofia in Bulgaria and is a mobile first challenger bank in Southeast Europe and regional leader in alternative payment solutions. TBI is well known as one of the most profitable and efficient financial institutions in Southern Europe. So it is as well a regional pioneer in alternative payment solutions and is building an ecosystem by combining financing and shopping to address customers' needs. TBI Bank holds currently a Ba2 rating by Moody's with its anticipated bond issue rated Ba3. Colleagues, before leaving you the floor, so let me just very quickly introduce a few deals about your first international bond, which will be in euro, dedicated to a professional audience and with a minimal settlement amount of 100,000 euros. So I leave you the floor. We can meet a bit later for some questions regarding the bond itself.
My name is Peter. I'm British, over 20 years in retail banking and fintech. TBI is the second bank that I have a pleasure and honor of building together with a team. And I have become CEO of TBI in 2016 when the bank took on a new strategy. Lucas.
Thank you, Peter. I'm Lucas Tursa. I come from Lithuania, Vilnius. I've been doing funding all my professional life. I have mixed experience in the public sector. In the past, I used to run the treasury of the government of Lithuania, so I come from LIBOR minus environment, and now I have the pleasure giving more to investors with LIBOR, whatever you say. So, Kostin?
Good afternoon. My name is Kostin Minkovci, Romanian. I'm in charge of credit risk in TBI. 20 plus years experience in credit risk, both in banking system and fintechs. I'm a data-driven professional and I've joined TBI back in 2019. Peter?
First of all, what's important for you guys to know about TBI? TBI is the main challenger bank of Southeast Europe. We started our history in Bulgaria. Today, we already operate in 5 markets. 3 markets we consider to be core markets. That's Bulgaria, Romania, and Greece. Greece is our newest market, and I'll talk a little bit about it down the line. We also operate in Germany and Lithuania, but in these markets we operate through partners. In Germany, we operate through Raisin for deposit collection. In Lithuania, we partner with our shareholder for finance for loan issuance. The bank, being a challenger bank, is very well recognized by local media because we're constantly innovating and bringing new solutions. The latest award that we're most proud of is Lovemark's award for favorite financial institution in Bulgaria. On the right-hand side, you can see our dynamic financial indicators. I will not stop here. We'll follow on. Let's take to the next slide because we'll be covering them down the line. The main business of the bank is retail lending. And here you see on the left-hand side our historical growth of the portfolio. As well as the fact that the main growth is coming really from small retail loans. Most of them are payment plans, which we do through the checkout of our partners. And I will talk again in more detail about exactly how we do this. Moving on to the next slide. So, as Alessandro already mentioned, we are one of the most profitable banks in Southeast Europe. Having very solid capital adequacy ratio and liquidity position. Majority of our clients in the loan book are covered actually by insurance. And our loan book is now over 900. These are the numbers. Actually, we're now already creeping up to 1 billion, but at the 6 months, it was 915 million. As I mentioned, majority comes from retail loans. These loans are split between Bulgaria, Romania, and Greece. And again, we have retail business, which is 84% of our book, and 16% is coming from business banking. In 2023, 6 months, we processed over 1.1 million applications. And what's most important here is that majority of them are already coming from self-service channels, whether it's online, our mobile app, or merchant in-store business. And only 9% are coming from our manned branch locations. Our merchant partner network keeps on growing. It's now over, and again, on 6 months data, because I will remember the existing numbers. It's already over 21,000 locations, and this is from largest e-commerce players, likes of IMAG, equivalent of Amazon in Southeast Europe, belongs to Naspers, or Scrouch.gr, largest marketplace in Greece, all the way to mom and pop stores somewhere in Stara Zagora in Bulgaria. So we're really agnostic in a way. We kind of merchants with whom we can partner and support in their growth. And all this business is supported by savings proposition, mainly term deposits. Moving on. So as I mentioned, the bank is really split on two business lines. On one side, we have merchant side of the business, where our goal is really to support our merchants' growth, our partners' growth. We really focus on helping them to grow their GMV. Mainly, we do it through alternative payment methods, which range from anywhere from a 3-month product all the way to 60-month product, depending on the vertical. And we keep on adding new solutions again in order to support their business. For example, we now just received our acquiring license. We support them with accounts, payments, etc. And on this side of the business, we already have 21,000 checkout points across the 3 markets. On the right side of the slide, it's our consumer business, and here really we're driving our main proposition is our mobile wallet. Our mobile wallet has all the standard products that you would expect, like IBAN, like card. Even though our card is quite unique, we designed it together with Visa as being part of FinTech in a Box project. We're the first bank actually in Southeast Europe to do it. It offers instant euro payments. Again, we're the first bank in Southeast Europe to launch instant euro payments. Local utilities, savings proposition, of course, but the main focus is really around lending products and ability for the customer to access to money very, very quickly. And on this side of the business, over 5 years, we have gathered over 2.2 million customers. Why 5 years? Because that's the GDPR line, because everybody represents customers in a very different way. We do it accordingly, us having a marketing consent and data query consents. Moving on. Now, a little bit about our products. So on a consumer side, our key products are payment plans. As I mentioned, they represent 60% of our retail loan issuance. General purpose loans, that's 40% of our issuance. Neon card, which is a unique debit credit card that we launched, and Visa is very excited about this. They believe this will be the future of cards going forward. Saving accounts and daily banking. As you can see, majority of these services are actually offered through the app, and we're driving more and more through the app. We only have customer service centers, aka branches, still in Bulgaria and Romania, where our customers still need them, but we're constantly reducing the footprint. Whilst in Greece, we already launched fully digital. Now, as I mentioned, our focus is on near-prime customers. That's really kind of where we're positioning ourselves as an organization and focusing mainly. And of course, the key competitive advantage that we have is that we start our relationship with a customer where in majority of cases, the first loan is already profitable for us. So we're not starting as typical neobank start. Let's give everybody a free account. Let's give everybody a card. Let's give everything for free. No, in our case, actually, we are starting from a paid product. And then we are giving our customers freemium daily banking so that they actually stay on a platform and continue using our services. Because actually every time that the customer logs in, I'll talk a little bit down the line, we're able to rescore him. So we're giving him the latest, up-to-date, freshest amount of money that he can take in the app. which is very important for our business model. That's why we want customers to come back to us more often, and we're ready to subsidize daily banking services. Just as an example to you, because we're running SEPA Instant on modern payment rails, we're using Bank of Lithuania for this, which are offering these fintech services. One payment for SEPA Instant costs to us 1.5 euro cents. So it's not a problem for us to subsidize. It's a cost for a customer to come back and constantly see his limit and eventually start using it. Of course, this is supported by very advanced risk, and Costin will cover it in more details. On a high level, we utilize over 760 data points in order to be able to separate the goods from the bads. The mobile app is extremely sexy from our opinion, definitely stands out in the crowd together with our neon card. And we use a lot of technology in order to behind it in order to really be able to communicate with the customer and market to him in real time, from chats to real-time marketing tools. On the right-hand side of the slide, you can see our split of our tenors and products, averages across the markets. The products are the same, but each market has slight nuances. We have a regulatory, or let's say in Greece, just average income is substantially higher than in Bulgaria, hence the average ticket is higher. So there are slight nuances, but the products are the same. On a business banking side, that's the next slide, please. We have two business lines. One is called TBI Pro. That's everything that helps our merchants to sell more. So mainly around working lines for our merchants to support them. We have long-standing relationships, so we have a lot of data about them, and we can really utilize kind of mainly technology solutions there. But there is also a historic part of the business, which was a business before finance acquisition, when the bank really took on a kind of a new strategy, where we would work with mid-sized residential developers, and actually it's the only part of our loan book which is collateralized. Majority of our loan book is not collateralized. Where we usually enter where the building is already out of the ground, so loan to value is usually around 50%. And for the developers, instead of selling the apartments at a discount, we only deal with residential. It's only apartments and small townhouses. They can take a bridge loan from us and finish the building, because otherwise they would need to be selling at a discount. And for them, it's much easier just to get financing, finish the building, and then still sell at full price. So it's a very nice niche, but it's not a very scalable business model, frankly. However, it's been very historically profitable for us. Cost of risk is almost zero there because of loan to value and because residential units are ultimately extremely liquid. Moving on. Now, this is our funnel. As I mentioned, our funnel starts, first of all, from the merchant checkout. We do direct to consumer as well. This is the first year, actually, we started doing it quite more actively. But still, the majority of applications are coming from the merchants. Where this checkout could be, again, either it's e-commerce store, either it's in-store, and now it's already beginning to become really part of embedded finance story. And we are really deploying this in Greece now most actively, and I'll talk about it when I come to Greece. So the journey starts where the customer just wants goods or services, right? And as I mentioned, we're completely agnostic. We can work from black and white goods to medical, education, second-hand auto, whatever it is, right? So at this point, the customer doesn't really care about TBI. What they care about is really an ability to be able to split their payments. Now, at the moment that they are applying, Costin will score them. So let's say they want a Hoover, and the Hoover costs 400 euro, but Costin will see that they're actually good for 1,400. So as they're applying for the loan, we'll push to them the app so that they can manage the loan when they repay the loan, take payment holiday, change the duration of the loan. But behind that loan, there is an IBAN and there is a card. And most importantly, there is customer dynamic limit, so that they are able to see that there is another 1,000 there already in the wallet available to them. All they need to do is click a couple of buttons and that money will be on their account immediately. They can go and spend, or they can use it as part of their revolving line on the debit credit card. Now, we will support it, of course, with a lot of technology. We are using BPC as a card processing system, for example, Ivan for real-time marketing, Provenir for decision-making. Provenir is a tool that, for example, Apple, together with Goldman Sachs, uses. We're actually very proud because we chose it 6 months before it was announced to be used for Apple. Klarna uses that tool as well. And then we'll use a lot of different campaigns in order to re-engage the customers and keep them on the platform. So we'll use daily banking services, use our card, log back into the app, and whenever they need money, they know it is accessible there for them without anymore having to go anywhere to any branch, call center, or apply anywhere else for a loan. So this is exactly how the journey looks like. So at first, it will start from a loan management tool. So the customer just taking a loan, he needs to manage that loan somehow, right? He needs to repay it. In the app, there's going to be a card, customer dynamic limit, exactly as I mentioned, freemium daily banking, which we believe is going to be a very sticky proposition because in Bulgaria today and Romania and Greece, our competitors are charging for all daily banking services. For us, that's not really kind of where we make our money. We are focused on net interest margin. We are focused really on credit. So we don't mind really to again subsidize this part of the business. Considering that we're doing it on modern rails and technology, the cost is really not that significant for us. Plus, savings proposition, very important. We need to fund ourselves, and we like to fund ourselves with deposits and current accounts. We launched this feature in May, and actually middle of May this year. And in October numbers, we are already seeing that 90% of newly opened deposits in Bulgaria are already all opened in the wallet. And the next feature that we're going to release is going to be in-app shopping, where we really want to bring together the proposition from our merchant partners and the ability for our customers to really shop in installments on everything they want inside our app, therefore helping both the merchants sell more and our consumers get good deals. Now, our core markets of operation. I mentioned we operate in 5 markets, but our 3 core markets are Bulgaria, Romania, Greece. This is where we have our stack present, our teams on the ground, where kind of really we have a full kind of proposition that we are building out there. Now, Greece being the newest market, we wanted to launch Greece even before COVID, but COVID slowed us down a little bit, and we launched last spring. We feel that it's a market with huge opportunity. Actually, this market has already become number 1 market by applications, but we're still taking it slow because we need to train the models, and Kristin will talk a little bit more about this. It takes time. We want to see the full cycle, but so far the demand has been really fantastic, both on the merchant side, where we signed up already over 3,000 partners. Just a few months ago, there was an article from a local general manager of Klarna in Greece, and he was talking about how proud they are that they signed up 300, right? So for us, it's a very nice sign, because we truly believe that regional challengers can compete with global players by having a pure focus on the market. Because frankly, our way is not just an API way. We're able to integrate with merchants in multiple ways, including truly embedded finance. So when I talk about some of the largest digital players in Greece, likes of Scrouch, largest marketplace, 37 million visitors, we are on their checkout. Shopflix, second largest marketplace. Car.gr, second largest auto marketplace. Hellas Direct, largest digital insurance company on the market. We are actually embedding ourselves into their mobile apps and their web journey. So we're not just there at a checkout, which was before done just through either direct integration or plugins, but here we're really already fully embedded with the real future of embedded finance, where you're able to actually integrate yourself into the customer journeys of large ecosystem or e-commerce or any kind of digital service providers. So for us, Greece offers a huge opportunity for growth. Merchants really there were still having to do kind of payment plans, but they had to do it from their own balance sheet. So when somebody comes and does it professionally, they're relieved because they can free up the capital and actually focus on their main business and having professionals step in there. Moving on. Now, a little bit about kind of competition. And here there are 3 key segments of players that we compete with. On one side, you have large incumbents. So these would be groups like Raiffeisen, KBC, UniCredit. These guys are very large banks, big corporate business, big mortgage business, big leasing business. And they really tend to operate mainly in the prime space. Then you have local players, except maybe Transylvania, which is a very large bank. Majority of them are underinvested in terms of technology, in terms of people. They don't really have a long-term strategy. They're part of certain groups. So we don't really see them as kind of major players. And then you have international fintechs entering as well, likes of Klarna, likes of Revolut. And this is where we really believe that being focused on our markets helps us. And we see this generally where you have at first you had a big wave of kind of expansion of global fintechs, and then local challengers are beginning to kind of muscle themselves in through sheer focus on the market, through being better integrated to local payment rails, to being better connected to the merchants, to understanding customers' needs better. And here, a great example exactly of Klarna's success versus us, because they come and they have, this is our API, this is how you integrate, right? We will do it in multiple ways. We'll have our merchant enablers team to support marketing activities of merchants. We'll design the product around them. We'll have them embed that product into their customer journeys. A one-fit-all approach just does not work well enough. And you can imagine when Nikolai or Sebastian are sitting with their boards, first they're discussing what's happening in the US, what's happening in UK, what's happening in Germany, Japan, India, etc. By the time they get to Bulgaria, Romania, Greece, everybody's already tired, and same happens to their resources. And at the end of the day, resources need to be focused on organization, whether they tech resources, marketing resources, re-engagement resources, data resources, etc., etc., etc. Therefore, we believe there is quite a room for us to grow, and our historic performance indicates that we have been growing substantially higher than the market. Moving on. Now, on this slide, we're demonstrating our focus really kind of in terms of partnerships. As an organization, we knew being a smaller player that partnerships are very important for us. And innovation is key. Being a challenger bank, we need to be constantly bringing new solutions and tools to the customers. Our team is very international, so we see a lot of experiences of what works, what doesn't work in other markets. And we were first ones to launch e-commerce and deposits online, digital onboarding, with tools like Confido, which are used by, again, likes of Revolut and Barclays, and to be honest, now already many large international players. Digital signature. We partner up with Cardiff as an insurance provider. We partner with Raisin to launch ourselves in Germany for deposit collection. And we continue partnering with merchants as kind of core proposition, and as well as Visa. I mentioned that we were the first bank to be part of a fintech in a box program for Southeast Europe, because they really saw an opportunity of organization which is challenging the norms of current banking business models in the region. Moving on. Now, this slide demonstrates that we have been scaling really our merchant partnerships, which we see as a core part of our business. We are completely agnostic in terms of which verticals to work with. Now, it's important to understand again that we really prefer verticals that are not like Klarna's. Klarna works on high velocity verticals, so this is usually fashion, apparel, etc. We are more in a firm space or some bid space, which is kind of longer term, higher tickets, interest bearing usually services and products. Whilst Klarna really goes for kind of true buy now pay later, which is free to the consumer, but ultimately these customers don't re-engage well into the future paid products, which is exactly how we actually make our money on the lifetime value of a customer, rather just on a kind of one interaction with a customer. And we operate from marketplaces to auto dealers, to electronics, to furniture, as I said, medical. We even had babies, we financed C-sections with our payment plans, right? So it could be dental, it could be anything really, cosmetics, etc. We partner from largest players really to kind of mom and pop stores, and we are agnostic whether it's e-commerce, whether it's in store or hybrid on card. And as you can see, the historical development of the checkout points has been very strong. So clearly the merchants and our partners see value in what we're bringing, and we are driving really increased sales for them. Moving on. Now, of course, all this is possible only on modern architecture. So for us, really, technology is key. We're very much a tech-enabled bank. We really focus a lot into bringing some of the best solutions. We have our own development resources, which we keep on enlarging, because we really truly believe that our future is in being the faster we can deploy and integrate, the more competitive we will be. So we're really bringing kind of a hybrid of some of the best solutions globally from the markets, and deploying also some of our own development tools as well. Moving on. Now, the team. That's really the key. The team is ultimately who makes this happen. On one side, it's our supervisory board, and our supervisory board, we have one representative from our shareholder for finance, and 2 other board members are independent to for finance, because we're really kind of being a regulated business. Even though we are part of for finance, but we run quite independently. We have to be, and ultimately we have quite significantly, let's say, a different business model. The team is represented by over 50 nationalities. We're probably the most international business in the region. Frankly, it's quite rare to have so many members of the team coming from multiple markets, which we believe is really part of our culture and a differentiating point. And these people are coming with experiences from largest consulting companies like McKinsey or BCG, to people who worked before in the regulator, which of course helps an understanding much better of our business model, and helps us kind of drive good business and best practices. Moving on. Now, in 22, what we've been really focused on. In 22, our key focus was on launching Greece and preparing our card to go live to market. In 23, our key focus has been really kind of on moving our customer acquisition to more self-service channels, and we have already achieved that, as you saw in my earlier slides. And 24, 25 will be more about enriching our proposition and standardizing our stack across all 3 markets. So ultimately, we can deploy in one go across all 3 markets, same releases. On this side, I'm passing over to Lucas.
Yes, I guess it's my turn. Thank you, Peter. Hello, everybody. So I will give you a short story about our funding activities and how we manage that. When we started transformation of the bank in 2016, we decided for ourselves that the funding would be very important part of our day-to-day business activity. Not only because of, we need to fund the business, but also we want, due to the situation we are in, we want to create a very sustainable, very robust funding model, which will allow us not only to support the very fast business growth, which, Peter talked, more than 30% on quite extensive period of time, but also to withstand any volatilities in the market, turbulences, and etc. So what we started, we said, let's put under one roof all units which are engaged in the funding activities. Retail deposits, corporate deposits, treasury, money market, wholesale funding, capital markets, in order to have very quick decision-making possibilities to react on the situation where to fund, taken into account the cost and risk. Next one, please. So this is why you can see now what, sort of in terms of liability structure, the predominant part of our funding comes from deposit market. We realize that operating in EU markets and, having very relatively and quite stable markets in Bulgaria, Romania, and now Greece, we have an opportunity to fund ourselves from the very stable, very granular deposit market. And this is why you can see that, 90% comes from deposits. Very small part comes from the capital market. We have few small deals, which I'm going to talk later on in the book. But this is where we get the advantage in terms of cost and in terms of stability. We're also very well capitalized. The beauty of our business is that we are self-capital generating institution, which allow us, to support our growth. Next slide, please. So talking about deposit and our strategic decision, what we want, to have that very stable base on funding. We said, look, let's first diversify by the markets. So we have ability to fund ourselves in Bulgaria, in Romania. We have ability to fund in the largest European saving market, Germany. We don't mainly due to the cost disadvantage, but we have more as a backup. And we are planning to start probably operating for the deposit gathering activities in next year in Greece. So 4 markets in terms of diversification, 7 channels. So we can offer online and offline, depends on the customer preferences. You can see that the cost of euro, which is nearly around 60% of our funding, is very low. In second quarter of the 2023, it was around 1%. It's going to increase going forward a little bit. We expect that by the end of the year, it will be around 1.5%. However, it is much below the ECB benchmark, which we have. But on another side, we had experience of rapid increase of cost of funding in Romania due to the high inflation and the policy of the central bank putting the base rates very high to 7%, which stimulated or in a way sort of put the market cost of borrowing at around 8.5%. Overall, it's put our cost of funding, when you blend all the currencies, around 3% currently. So euro, we see, but in 2024 will slightly increase. However, Romanian currency borrowing will decrease, which will allow us counterbalance in a way on the fund. But what most important, we fund ourselves much cheaper than the benchmark from the central bank in US or in euros. Also, what is important, but our deposit portfolio is very granular, very small tickets. And it was a strategic decision. We said, look, we don't want to get rich quickly, get quick large tickets, which will be, in terms of crisis, very unsustainable. They would leave first. So let us fund and mainly give a priority to the tickets up to 100,000, which are guaranteed by the government. So this is why you see, but it's nearly 100%, actually 93% of our retail deposit portfolio is under government protection scheme, which makes very stable funding for us. So I talked about capital markets, and look, having such a cheap cost of funding, such a low risk cost of funding, in terms of volatility, we don't need capital markets, sort of, because we can support our growth easily from different markets where we operate using the deposit product. However, we launched small transaction locally in Bulgaria, 10 million euros tier 2 bond, specifically for capital optimization purpose. And we did few small deals as well for MREL purpose. The problem with the local market, it is quite illiquid. So if we need a little bit larger amount, we need to go abroad. And this is why we are in the market with a relatively small but a little bit larger transaction when we ever done. For this reason, we acquired the ratings from Moody's rating agency, We are rated investment rating BA3 for counterparty risk. We are rated BA2 for deposits, and this bond is expected to be rated BA3, one notch lower, due to the position on the liabilities scale, you know, of our book. Next one, please. So this is my last slide, but I want to talk about liquidity, and it's very important. As you can see, we're growing very fast, and we set ourselves, look, we want also to keep the large buffer in terms of liquidity, and you can see that all our ratios are much higher than, you know, sort of market averages, you know, sort of. However, for us, it's important, and having such a fast growth, we want to have that liquidity, which we can employ, you know, sort of, or deploy actually into the profitable projects. However, and not to miss certain opportunities. This is why this deal, which we are doing up to 50 million, will be still very small in our overall liability structure. So for us, to refinance that, we know we don't need to rely on the capital markets. You know, we can easily refinance from our liquidity or raising quickly through the deposit. And this is the beauty to have such a funding model. Costin, I think it would be your turn.
Thank you, Lucas. Now we'll go a little bit through the risk area of the bank, and we can start on the right-hand side with the graph showing what was the cost of risk during the last 4 years, including first half of 2023. And as you can see, it's a very stable cost of risk. So the performance of the portfolio is stable, although the portfolio grew on a yearly basis by 30% year on year. And how do we manage this stability? We are managing this stability with all the data that we've collected for the past 2.2 million customers, plus all the new data sources that we are enhancing and getting more and more in order to improve our risk decisioning. Currently, we are having 7 credit scorecards for applications, 2 fraud scorecards, and 2 behavioral scorecards in all the geographies for all the products, and we are able to process 20 applications per minute with the risk decision engineering, with the instant to 30 seconds time to yes. And more than this, we are having this key feature that Peter was speaking about, which is the customer dynamic limit. All the time we are scoring and rescoring the customers, coming back to them with the most updated limit that they can tap on and get the money out. If we move to the next slide, we'll be showing what we did in the last period, and also what's the focus for the next period. So in the last period, we've managed to increase the data points from 600 to 760 by partnering up with a Hungarian startup, through which we are getting 160 data points from if the customer has Viber or not, if the customer has WhatsApp, when it was last time seen on WhatsApp, LinkedIn, Airbnb, Booking, and so on and so forth. And what is this data for? This data is to make us take a better decision and to approve the right customers, while to reject the potential bad customers. In terms of near-term plans, we are focusing on building and enhancing the data with by tracking our mobile app usage, by using the transactional data of our card, where it is used, how it is used, and in the same time looking for open banking. And actually we started a proof of concept in Greece in July, and we are transforming it now in business as usual, through getting the data of the customers directly from their current accounts with the other banks. Again, helping the customer to get approved, but also helping us to get the right decision. If we move to the next slide, we are presenting what's the flow of the customer. So a summary of what I've mentioned up to now. So Nikki, if we can move to the next slide, please. On the left side, the customer starts the journey with us. It's either through the mobile app through the online flows or in the shop. The customer is coming and doing an application to us. We are collecting, on one hand, the data given by the customer, on the other hand, all the data from external sources like credit bureaus, like fiscal authorities, NSSI in Bulgaria, fiscal authority in Romania, plus all the digital data of the customer. Then it moves to Provenir, which is the risk decision engine. And Peter was mentioning that it's the same decision engine used by Apple to issue the Apple card, by Klarna as well. And all the data is put there. We are as well managing the rules in Provenir. Our scorecard sits there. And based on all the rules implemented, we are giving a response to the customer, which is instant 30 seconds. For the vast majority of our cases, 80 to 85% of them are getting an instant decision. The rest are customers which are on the edge, and those are moved to human tech decision. And a person is reviewing the case in order to give the final response for the respective case. If we move now to the last slide of the risk area, we are presenting the evolution of the non-working portfolio. On the middle chart in the page, we were starting somewhere at around 15% back in 2019. Current level, we are at 9%, and it's the same level as end of 2022. This is a balance sheet view of what is non-performant out of the entire portfolio. While the impairment coverage by provisions, it's 106%. This is at the overall product level, including the business banking. We are full IFRS 9 compliant. We are audited by Tier 1 auditor, Ernst & Young, and as well under the scrutiny of the central banks in the three markets in which we are operating. This would be it on the credit risk, and then now I would pass the ball back to Peter.
Yes, Tim, thank you very much. So guys, look, I'll go very quickly. I see the time is is running. So key numbers that you need to remember. Our revenue in the last 12 months has been 183 million. The CET1 is at very healthy 20 above, actually 20%. The bank is continuing healthy growth, maintaining a healthy net interest margin and very healthy return on equity for a European business. Moving on. Now, as I mentioned again, our growth indicators have been very strong on both new business and loan portfolio and revenue and profitability. Very self-explanatory, so don't want to waste again the precious time of Q&A. As we scale, you see that our cost to income is coming down. Of course, for us, we run the bank for profitability. It's very important that we generate our own capital. So we're always kind of bottom line focused, and part of managing the bottom line is, of course, managing the costs of organization. We do invest a lot, both into technology, into people, into going to new markets, into new product launches. But as we scale further and further, you see that cost to income coming down. So now onto the final slide before the Q&A. What do we guys want you to really remember about us? First of all, that TBI is a leading challenger bank in Southeast Europe with a scalable business model. And again, historically, you can see how it's been going, whilst being very prudent in terms of both the capital and liquidity ratios, utilizing the latest technology and advancements in terms of both developing the infrastructure of the bank, but really kind of core focus on our lending sophistication. And I'm truly proud of what we do, because I think that for European markets, we're probably amongst, if not the leaders in terms of the way we do it, but definitely amongst the leaders in credit side of the business. The business had historical strong financial track record, and we aim to maintain it like this, because we truly believe that successful bank is a bank that is profitable, that is developing well. And of course, this is all underpinned by the experienced management team with the experience of coming from multiple markets, multiple geographies, and multiple backgrounds. And that's very important. You see that team has been very stable, in the bank growing and developing further and further. On this note, thank you very much, and we look forward to the Q&A.
Let me show you now in a map where the bond will be placed, because in this case I selected, for example, using Cbonds platform. I see we have also some Cbonds clients that also use the platform. So we selected Eastern Europe corporate, so banks, bank sector of Euro bonds with a maturity up to 2030 and issue rating starting from B. So that's the range of the bond you are going to issue, and we can see where it will be placed. So it will be here. It's really an interesting bond, according also to the information that we just received about the bank. While I'm showing this graph, can I ask you a question that we received from many people? So why did you choose the Sweden, so the Nasdaq Nordic, for listing, and a Sweden Norway-based investment bank, which is ABG Sundal Collier, as a lead manager? Because it looks like you will be the first Bulgarian bank who listed bonds on Nasdaq Nordic. So why not Vienna? That's the most interesting question we have now.
Okay, good question, and I have a very rational answer. Cost. Being first-time issuer and having such a small issue, and again, we're saying up to 50 million, but we have flexibility to, if we need, to downsize, it is cost is important, because, you pay, if you go to London, you pay huge cost to lawyers, to the big guys in London or in whatever, or Germany, who will demand very different money. And for such a small issue, for them, economics needs to be, reasonable. This is why we chose Nordic market, because it is a relatively liquid market, and it's not only about Nordic investors, it's about any kind of investor, but would be listed on the Stockholm Nasdaq exchange. The cost is important, because the documentation, it is quite simple. Second is the cost of lawyers and investment bankers, slightly cheaper. And also ABG had good track record with our parents group for finance. Again, it was not something imposed from them or etc. However, for us it was important to have that continuity. So this is few reasons why we chose Nordic markets and Stockholm Stock Exchange for placing, and ABG as a lead manager.
Perfect. Thank you very much. Do you want to add something else regarding this question? I think it's fair enough.
Yeah, I can pick also on the market. Market is, look, market is not ideal. We know that, and but can we wait for ideal market? We are doing for ourselves. Again, it is not funding exercise. It's more regulatory driven exercise, because we can fund much cheaper, and it's very expensive for us. This is why I showed we didn't fund ourselves from a capital market, and we don't need. However, due to regulatory reason, we need to do that. However, we do more pre-funding. And the reason is, but we are growing very fast, and we don't want to miss on opportunities. Let's say next year, looking for the funding, and if there is, again, market is not ideal, we need to scale down the business. It's easy. We could scale, lower the growth rate and grow as most of the banks grow, but we see much more opportunities in the markets which we operate, and we don't want to miss. And as Peter said, we are all about, profitability, be profitable.
Perfect. Do you plan to execute 1.75-year call option?
You're muted, Lucas.
Thank you, Peter. Yes, people probably can read my lips already. I've been talking quite a bit. Yes, because it doesn't make sense for us to keep longer, because it becomes funding instrument, not regulatory instrument. MREL eligibility has one of the criteria. It needs to have more than 1 year remaining maturity. So if it passes, it doesn't count as MREL, as a regulatory instrument, and counts as a funding. Funding compared with deposits 1.5% in euros, 10 plus something, there is clearly economical reason to call that. I hope I answered.
Yeah. Simon is asking, can you please give more information about the process of investment in the bonds? So what are the exact dates of the paying of the interest rate? In addition, in which days we can subscribe for the bonds?
Okay, good question. Currently, this week we are meeting the investors. We are roadshowing, and we expect to, we have last meeting, I think, on Monday noon. So this is the roadshow where we meet the investors. We planning, sort of probably to try to close the book next week. So this is the period which, sort of people can approach us or our lead manager, ABG, to get more information or register their interest.
You are now planning this bond issue in a moment of quite sharp interest rate hikes. If we take, for example, German bonds as a risk-free rate for euro area, it rose from 0 in the beginning of 2022 to almost 3% now. So Bulgarian government bonds yield jump up to 5%. So your bonds will be probably in an over 10% area. Why you decide to start funding right now in a moment of high rates? We already discussed it, but maybe it would be interesting to repeat a bit the process. Now, why even now you would like to go ahead with this funding?
Yeah, very easy. When? Tell me when it's going to be good, and we will go, sort of. So this is where we have the question. Again, for us, the cost is important, but more important, missing opportunities in business. This is what, what in the Peter's presentation, you saw what we're growing very fast and we are profitable. And we are not one of these large banks, which, comes with a lot of, decision-making centers and say, look, in this country, we need to do the same as in another country, sort of. Doesn't matter if it's profitable or not. We do because we see the business opportunity and we see what we're bringing value to the customers. By bringing value to the customers, we get, sort of our business running. So for us, the business opportunities, missed opportunities, more important. As I said, we're doing pre-funding. We don't need anything for this year. We're doing for the next year. But we are afraid a little bit, but next year might be again volatile. And if we need to slow down on the business, which we can do, sort of, it would be not, sort of not smart to do. So it's better to do now, taking certain risk and maybe a little bit cost. Cost is also for us because it's our debit and small issue. And small issue, we understand what we need to pay a little bit liquidity premium, but because of the maturity, and maturity is quite short, so, sort of it's ideal for somebody, to keep to maturity and really earn good return on that.
Perfect. Thank you very much. I think we're set now. I think all our participants have all the right information to take a decision and to go ahead with these interesting bond issues. So thank you very much, colleagues, for joining us today. Thank you, Peter. Thank you, Kostin. Thank you for joining us today, and Lucas as well, of course. I hope to see you soon for a new bond issues, maybe, who knows. So thank you very much, and have a nice day.
Thank you guys for coming to listen us.
Thank you. Bye.
Bye-bye.